Welcome. This is Bert Dohmen with the March 16th edition of Chart Guru. Today we will be looking at the Emerging Markets Index for Morgan Stanley. The emerging markets are usually ahead of the US market, and because that is the first place that money flows out of when the situation gets a little bit more risky. And that is where the markets are right now. So let's look at this chart. This is the Emerging Markets ETF, and this low here is in June of 2012. If we combine that with the low of November 16th last year, we can see that this is the first support areas right here on a decline. Now, what does the chart tell us so far? The chart is actually very revealing. We did make a new upside high here. This went over the high of last year, so it's this would be an upside breakout. However, when an upside breakout has no follow-through to the upside and then goes back down below this breakout level, which is this horizontal line, that means it was most probably a false breakout, and false breakouts traditionally have sharp declines. So they are meant to trap the bulls. And here we can see, if we take the shorter uptrend line, going from the November 16th low, combining it with the most recent low, we can see that the emerging market index now has broken through that. It has broken through this low as well. So these are the first negative signs that most probably this was a false breakout and that the index is on its way down. How far down? You can never tell. We can have some potential targets. The first target would be right here. The next target would be the November 16th low, which would be right here. If we take a look at our indicator below, which is a stochastic, it's a modified stochastic. We use our own parameters. And we can see here that the sell signal, which we actually got last month and was contained in our Wellington letter, we see that we did get a sell signal here just almost right at the top when the stochastic crossed over. And now we saw that even this attempt here for these two lines to cross over again to the more positive side, it failed, and now they're widening again. That is a negative signal and strongly suggests that this index is on the way down. Now, if that index is on the way down, that means that money is going into the risk-off situation, which means that the commodity type stocks into areas will be under pressure, and the US dollar will rise, which will also be negative for the precious metals for a while. So all kinds of things will start happening here. So the next several weeks will be probably in favor of the bears. Okay, that's all for today. This is Bert Dohmen signing off for Bert Dohmen's Chart Guru.